SIT ने रिपोर्ट किया है, उन्होंने ये कभी भी रिकमेंड नहीं किया है कि इसको बंद कर दिया जाए। ये धारणा बिल्कुल गलत है कि SIT ने रिकमेंड किया है कि पी नोट्स को बंद कर दिया जाए। SIT ने ये रिकमेंड किया है कि पी नोट का जो कौन इन्वेस्टर है, अल्टीमेट इन्वेस्टर, उसकी जानकारी रहनी चाहिए सेबी के पास। वित्त मंत्री ने भी ये आश्वासन दिया और ये क्लैरिफाई किया है रिपोर्ट आने के बाद कि कोई भी काम जल्दबाजी में नहीं किया जाएगा।
There will be no ban on P-notes. That's the categorical clarification coming in from the SEBI chairman, UK Sinha. He also said that a mechanism is already in place to identify the real beneficiary of P-notes. Good evening. Thanks very much for joining us on India Bizarre. It's a packed news day, so let's get straight to the other headlines that we're tracking this evening. The Cabinet clears the amendment to the Goods and Services Tax Bill, agrees to compensate states for 5 years. The Congress sticks to its guns for now, but sources say back-channel negotiations are on.
Cabinet also clears the setting up of the National Investment and Infrastructure Fund with an initial corpus of 20,000 crore rupees. Also waves the green flag for foreign investors to put their money into alternative investment funds.
The Tata Group is all set to enter 3 new digital frontiers as Cyrus Mistry unveils the group's 4th generation business plan. An online shopping portal, health and wellness platform and big data analytics will be the new bet. That's a CNBC TV 18 exclusive.
Wall Street trades with caution as the US Fed gears up to announce a rate decision later tonight. A CNBC survey shows the street is still expecting a September rate hike.
10 companies are in the race to bag a 60,000 crore rupee defense contract. Sources say heavyweights like Tata Motors, M&M, L&T among others slug it out to manufacture futuristic infantry combat vehicles. Another exclusive.
CLF turns to private equity players to cut down its 20,000 crore rupee debt. Sources say the company is planning to raise $2 billion to cut its debt by over 50%. The stock rallies in late trade. That's an exclusive.
The Aviation Ministry is giving final touches to domestic airlines to be allowed to fly abroad, but within a 5,000-kilometer radius. Middle East, Gulf and Singapore could remain out of bounds.
A day after sparring with the Central Food Regulator over Maggi noodles in court, the Maharashtra FDA Commissioner backs the move to ban the instant noodles. Nestle India posts losses of over 61 crore rupees in the second quarter on the back of that ban.
$1 billion, 1/5 of our investment, will come to India. This doubles our total investment in India.
GM's global chief Mary Barra is in India, says GM will pump in big bucks to double its market share in India by 2020. This even as the company announces the closure of its Gujarat plant to consolidate its operations.
Yaqub Memon will be hanged tomorrow after the 3-judge Supreme Court bench rejects his curative petition. The president also refuses to intervene. The Maharashtra governor rejects his mercy plea.
It's the final journey of the People's President APJ Abdul Kalam's body is in Rameshwaram, where public will be allowed to pay homage. Tamil Nadu CM Jayalalitha will skip the funeral because of ill health. But straight to the big story tonight. The parliamentary deadlock may not have ended yet, but the government is doing all it can to ensure that the new GST constitutional bill is ready for introduction and passage as and when it can be tabled in the Rajya Sabha. The government has today approved the amendment incorporating the suggestions made by the select panel on the GST. The big change is the amendment in the compensation clause, which now guarantees states an assured compensation for any revenue loss incurred to 5 years after the rollout of the GST. Joining us now to discuss all of this and more, Congress leader Randeep Singh Surjewala, member of the GST Select Panel, and Rajya Sabha MP Rajiv Chandrasekhar, and also our very own Sapna Das. Mr. Surjewala, coming to you first. The Cabinet has now cleared the amendment. This was, of course, the big change that the Select Panel had asked for, which was the compensation clause to be committed to state governments for a period of 5 years. Will you now allow this bill to go through in this session of Parliament?
Shireen, the truth is that GST bill as is being proposed by this government is pitted with compromises, exclusions and exceptions, thereby nullifying the very purpose of GST. Congress has given a dissent note in consultation with other political parties, as also various economists, and that dissent note is appended to the report of the committee. we will continue to ensure that unless and until those reservations which actually nullify the quest for a common GST are taken care of at the Parliament level, the bill in its current form is not passed, because it will do more harm than good to the country's economy.
So, Mr. Surjewala, you're saying the Congress will not change its mind and you will not support the passage of the bill in the Rajya Sabha, if at all the Rajya Sabha is allowed to function?
Congress is the original author of the GST bill. We mooted the proposal. It is the likes of Srimati Sushma Swaraj and Shri Arun Jaitley, both of whom were leaders of opposition leading the BJP, who did not permit a GST bill to be passed. So we stand in favor of a GST for this country in order for the country's growth and a common market.
Okay, Mr. Surjewala, hang in there. Let me go across to Rajiv Chandrasekhar. Rajiv Chandrasekhar, you've obviously heard the Congress's arguments in the select panel. The Congress has, of course, been demanding a pure version of the GST, and nobody will argue with the economic logic of that. But as you have pointed out previously to us, that this was the best that could be done in the current situation. Does your gut tell you that the GST is now closer to reality? Can we expect the passage in the monsoon session? What is your thought?
No, my instinct is that I think we are one step closer. I don't do crystal ball gazing, Shireen. I'm only hoping that the Congress, you can't argue with what the Congress is saying, but I think they are ignoring the fact that this GST is clearly a first step in the evolution of a national market and a national sales tax, so goods and services tax. So I'm hoping that they would, at the point of crunch, they would come and support the bill. There is no disputing what they are saying, that this is a compromise. It's a compromise not on ideals or values. It's a compromise between states and center. And there are various governments and 10 years of consultation that have gone into this. And I'm hoping that they don't nitpick at this stage and go ahead and support what is obviously a very, very important first step in the creation of a national market.
Right. Rajiv, we understand that at this point in time, the big amendment that has, of course, been moved by the government is on Section 19, which is basically to get the centre to commit to states for a period of 5 years on any revenue loss once the GST comes into place. Would you be disappointed if some of the other suggestions made by the select panel are not considered?
No, I'm not. I'm sorry to sound so pragmatic, and I'm not as theoretical. I'm not an economist, but I understand how important it is for us to get going in the creation of this common market and to break down trade barriers between states. And so for that, I believe we should be prepared to live with some compromises around the edges on the purest definition of GST. Yes, I accept the contention that this is not the purest definition, but I think the fact that we have to make this first step in what is clearly the big transformation on indirect taxation is something that we should not ignore and leave to debating matches. We must make that step. We must move forward.
Right. Mr. Surjewala, the amendments that you moved have not been accepted. The cabinet has now cleared the one amendment that the government, or at least the one amendment that we know the government intends to move. Are you likely to support the GST bill, sir? Straightforward question. Will you allow the Rajya Sabha to function? If the bill is to be tabled, will you support it or not?
We want a true GST bill to come. Mr. Modi, in his own arrogance of power, is not permitting GST bill to come in the shape that is beneficial for the country's economy and growth. If you are going to have a GST bill that is pitted with compromises, exclusions and exceptions, which will nullify the very purpose of GST, it is of irrelevance. And that is why we are bringing in those amendments.
Okay, Mr. Surjewala, if I can ask you this, till Saturday it seemed fairly certain that it was curtains as far as the GST bill was concerned, but today there seems to be a ray of hope. We understand, and this is of course source-based information, that some sort of back-channel conversation has taken place between the Congress party and the government. So can we assume that there is hope for the GST bill in the monsoon session? A clear answer, please.
I completely reject suggestions of any back-channel negotiation. GST should be brought in national interest, in the interest of economy and growth of this country. And Congress would ensure that a true GST bill which will take into account all those concerns which are not of the Congress party, but also of the economists and various states, all the stakeholders, are taken care of and become part and parcel of the GST bill. Mr. Modi and his government should also not stand on false ego and do something that is in national interest and in the interest of our economy and growth.
Okay, Rajiv Chandrasekhar, I'm not going to ask you to crystal ball gaze, but on the back of the comments that you're hearing from Mr. Surjewala and the fact that most regional parties with large representation in the Rajya Sabha, for instance, the TMC, the Biju Janata Dal, are on board as far as the GST bill is concerned, would you think that it's perhaps naive to assume that the GST bill is a done deal in the monsoon session?
No, nothing in Delhi is a done deal till it's a done deal, Shri. That's the first rule of Delhi. So I wouldn't start betting on this to be a sure thing. But I am prepared to go stick my neck out and say that at the end of the day, I think everybody behind the political rhetoric understand the need to get the GST bill passed because there is an April 2016 deadline. There is a lot of work that still needs to be done to make this a reality. The gap between what we have in the GST bill with Section 19 amendment is a significant move forward. It assures states of the fundamental issue of revenue loss. It's a very, very, very big step that the government has taken. I am very hopeful that at the end of the day, reason, pragmatism and logic, and at the end of the day, doing good by the country will cut through the political rhetoric.
Well, 24 hours is a long time in politics, and let's see where this heads. But Rajiv Chandrasekhar, Randeep Singh Surjewala, appreciate you joining us here with your take on the GST bill. Let's go across now to Sapna. Sapna, GST was not the only thing that the Cabinet took up and cleared today. It also approved the setting up of the National Infrastructure Investment Fund, as well as the Alternate Investment Fund. Of course, the NIIF had been proposed by the Finance Minister in the budget. Take us through the details of both.
Well, the basic purpose here is to, have funds to kickstart the infrastructure sector, including the stalled projects. So the proposal here is of an equity capital of around 20,000 crores that's supposed to come in, the size of the pool. But what we are given to understand is that a small portion of that will be put in by the government in terms of an equity capital. The remaining money is expected to come in from other private sector participants, and there can be even global players like sovereign wealth funds, pension funds, the like. In terms of an actual practical participatory interest, what we understand is that as of now, nobody has really come forward because, the structure has yet to be set up. So today the Cabinet has taken the first move, it has taken the first step. Most likely next week we're expecting a bigger announcement on this front, or rather the next set of announcements, the rules, the regulations. What we're also given to understand is that, the government shareholding in the fund could be around 49%. The remaining 51% could actually be given to the private sector players, including the global players. So the rules and regulations for that will have to be worked out. There will be a fund manager to take care of these funds, and very critical would be the fact that how much is the equity capital the government would be putting in as of now, because almost half the financial year would be over by the time the
20,000 of course was the allocated amount. Sapna, hang in there. Let's bring in Vinayak Chatterjee of Feedback Infra for a quick comment. Vinayak, appreciate you joining us. The Cabinet has approved the National Investment in Infrastructure Fund, which was of course promised in the budget. Your first reaction?
Shireen, I am extremely happy because this NIIF, the National Infrastructure and Investment Fund, has a great ability to catalyze the growth in the infrastructure sector and improve the mood and do all the things which we are waiting for. A few quick points. One, the 20,000 crores was set aside by the budget. Since the budget has been cleared by Parliament, I take it that the 20,000 crore seed capital is automatically sanctioned. The budget speech also mentioned that it has the capacity to leverage itself 10 times, which means that the size of the fund can easily be 200,000 crores. This can impact both public expenditure in infrastructure, and it can also provide the government seed capital for PPPs. More importantly, there are many countries who are willing to take a bet on and invest in India's infrastructure growth. And this is really the result of our Prime Minister Modi's very successful international outreach. And therefore, these countries could possibly be also persuaded to invest in the NIIF, which is a kind of a sovereign fund dedicated to Indian infrastructure, but it provides an opportunity and a vehicle for many other friendly countries to invest and participate in leveraging this fund upwards. So net-net, it is a major breakthrough for the Indian infrastructure sector, and I'm sure it will make us all happy.
You expect participation from sovereign wealth funds. Vinayak, we're still waiting for the specifics from the government as far as the NIIF structure is concerned. But besides professionally being run and having a professional board, what other specifics would you like to see the government put in place for the NIIF? What's on your wish list?
No, the first item is that it should be professional. I hope that there are monies outside the government of India which will come, so investors will demand professionalism. I would not like it dedicated only for public expenditure. I would also like it to be a source of seed capital for PPPs where the government can co-invest with the private sector. So these are my initial wish list, and I would wish the government leverages it very quickly, 9 or 10 times, and this should really be the financial test of Prime Minister Modi's very successful international outreach program.
All right, Vinayak, appreciate you joining us with a quick reaction there. We are, of course, awaiting details from the government on the structure of the NIIF. Let's now move on to Dalal Street, where the bulls seem to be back after that two-day break. The markets today moving ahead of the US Fed decision, which is expected later tonight. The Nifty gaining nearly 40 points, inching closer to the 8,400 mark. The Sensex gained about 100 points, moved back up above the 27,500 level. The mid-caps managing to outperform, and the mid-cap index gained nearly 1% today. But here's the big CNBC exclusive. SEBI is not even thinking of a ban on P-notes. That's the word coming in from the chairman of the market regulator, UK Sinha. Now, this comes after the SIT on black money raised the red flag on participatory notes, saying it's difficult to trace the ultimate owner. In an exclusive interview with CNBC's Sanjay Pugalia, Sinha also clarified that SEBI has enough mechanisms in place to trace the real beneficiary of P-notes. Listen in.
SIT ने रिपोर्ट किया है, उन्होंने ये कभी भी रिकमेंड नहीं किया है कि इसको बंद कर दिया जाए। ये धारणा बिल्कुल गलत है कि SIT ने रिकमेंड किया है कि पी नोट्स को बंद कर दिया जाए। SIT ने ये रिकमेंड किया है कि पी नोट का जो कौन इन्वेस्टर है, अल्टीमेट इन्वेस्टर, उसकी जानकारी रहनी चाहिए सेबी के पास। और मैं आपको ये बताना चाहूंगा कि 2011 के बाद हम लोगों ने काफी चेंज किया है और हमारे पास उसकी जानकारी है। यदि और उसको सुदृढ़ करना होगा तो हम करने को तैयार हैं। मैं ये भी कहना चाहूंगा कि वित्त मंत्री ने भी ये आश्वासन दिया और ये क्लैरिफाई किया है रिपोर्ट आने के बाद कि कोई भी काम जल्दबाजी में नहीं किया जाएगा, और उन्होंने बिल्कुल सही है, मैं उससे सहमत हूं कि अगर इस पे और कुछ करना है तो सोच समझ के करना होगा। लेकिन बंद करने की बात तो न समिति कर रही, न SIT कर रही है, न सरकार कर रही है, न सेबी कर रही है। मेरे ख्याल से ये एक बिजनेस नीड है, आवश्यक है, और इसको बंद करने की हमें सोचना भी नहीं चाहिए।
ओके, लेकिन क्या ये इंटरप्रिटेशन करना उचित होगा कि अगर जल्दबाजी में फैसला नहीं होगा, कोई एक फैसला ऐसा हो सकता है जिसमें इस बात की संभावना को खत्म किया जा सके कि बेनिफिशियरी ओनर को हम पहचान पा रहे हैं, नहीं पा रहे हैं, तो उसके लिए मैकेनिज्म तेज हो जाए, मजबूत हो जाए, और ये फेज में किया जाए।
नहीं, मैं ये आपको फिर दोहराना चाहता हूं कि बेनिफिशियरी ओनर कौन है, उसकी जानकारी सेबी ने 2011 में अपने सर्कुलर के द्वारा एस्टेब्लिश कर दी है। प्रत्येक महीने सेबी को ये जानकारी प्राप्त हो रही है कि बेनिफिशियल ओनर कौन है। सेबी ने यहां तक किया है कि जितने भी FII हैं या फॉरेन पोर्टफोलियो इन्वेस्टर हैं, सभी एलिजिबल नहीं हैं। उसमें केवल सिलेक्टेड लोग एलिजिबल हैं जो कि इशू कर सकते हैं। बाई करने में भी सिलेक्टेड लोग एलिजिबल हैं जो कि बाई कर सकते हैं। वो किस देश के हैं, वहां भी ये दिया हुआ है कि वो फाइनेंशियल एक्शन टास्क फोर्स एंटी मनी लॉन्ड्रिंग के लिए जो देश विश्व में जो एक फोरम है उसके मेंबर है, वहीं के जो निवासी हैं उनको मिल सकता है। इस प्रकार की बहुत सी उसमें बातें ऑलरेडी प्रोवाइडेड हैं। यदि कुछ कमी है उसमें तो उस पर विचार किया जाएगा, लेकिन ये विचार सोच समझ के किया जाएगा, जल्दबाजी में नहीं किया जाएगा।
That's the market regulator clarifying there's already a mechanism in place to know who the beneficial owners of P-notes are. This, of course, in reaction to this SIT suggestion of making the KYC norms more stringent. Here's the big corporate story of the day. The world is going digital. The Indian government is pushing digital, and the Tata Group surely doesn't want to be left behind. The group unveiled plans of entering the new age digital businesses at its annual leadership conference today. 3 different digital forays are in the pipeline. Sajit Mangat and Kritika Saxena have that story.
Is one of India's oldest industrial houses, and yet it's always been nimble enough to innovate and adapt to change. That streak is now leading the Tata Group to digital plane. The focus on digital has been growing since R.S. Mistry took charge at the helm in 2013. That vision is now close to being realized. Tata Group executive KRS Jambal today unveiled plans of entering 3 new businesses. The first would be the online aggregation platform. This platform will aggregate all product offerings from Group's consumer-facing businesses. The plan is to start an omni-channel marketplace which will integrate store shopping and online buying. This means that Tata and non-Tata brands across categories will be on offer and managed through collaboration between relevant Tata companies. The second foray will be in the arena of digital health and wellness in the form of a platform for healthcare providers and patients. The third venture is a newly formed consumer analytics division at Tata Industries, which will help in sharpening the group's consumer focus. As it looks forward to building these new digital businesses, the group is riding on yet another steady year for growth. In FY15, the group saw its consolidated revenue grow by 5.3% to touch nearly $109 billion. About 68% of this came from international businesses. The group also saw its market cap surge to $134 billion, an increase of 17% over the previous year. Capital expenditure for FY15 stood at $10 billion. Despite global demand volatility and uncertain markets, it's this successful financial record that the group will hope to build on with its foray into new digital businesses. In Mumbai with Sajit Mangat, Kritika Saxena.
Well, the Tata's digital drive there. On to the big story that we're tracking. The U.S. Federal Reserve's 2-day meeting will end later tonight with a statement expected at 11:30 p.m. our time. Markets not expecting changes to interest rates this week. Fed watchers surveyed by CNBC expect a rate hike in September, but by a very thin margin. Here are some experts with their views on what Janet Yellen is likely to do.
We're looking for September for the first time, but funnily enough, I'm not really expecting anything from the Fed statement today that will sort of confirm or deny that. I'm expecting it to be quite a bland statement, and there are several reasons for that. First of all, the Fed doesn't really want to tie its hand, give too much pre-commitment regardless to any one date. There's still a lot of important data points between now and September, which could potentially change its mind. Second of all, the Fed is sort of trying to move us away from date-dependent guidance and sort of subtle linguistic clues and more towards economic guidance. And third of all, I think the Fed feels it's already sort of told us enough that hikes are coming at some point, probably this year. Get ready. It doesn't need to hold our hand anymore.
The Fed doesn't want to surprise you, but at the same time they said they're not going to telegraph, for example, in this meeting that the next meeting they're going to raise rates. So the way in which they're going to signal, if anything, and what everyone's going to be focused on today is what's their assessment of the economy? How do they characterize jobs and labor markets, the assessment of oil prices, and do they use transitory factors, and do they talk about wage inflation? Now, the interesting thing is we're going to get the ECI report, which is a key economic report on wage conditions. We're going to get that after the Fed, and so that's going to tie into market expectations. So it'll also be in the speeches ahead of September as to how they're signaling their viewpoints on the economy and letting that be the signaling as opposed to an explicit signal out of the statement that they're going to raise rates in the next meeting.
It would be very difficult for the Fed to justify an increased assessment of economic conditions given the fact that since June, the data has been relatively disappointing. And as the Fed maintains that they are data dependent, they're watching still that significant amount of slack in the labor market, still very unconfident that inflation will reverse back to 2%. And so I think that keeps the Fed on hold much longer than the market expects. The momentum or the lack of momentum in the economy suggests that we are going to be in or around this 2% growth range for the next several years. So really there isn't any pressure on the Fed to initiate this year. They can wait till 2016, as we may see 50 basis points on an annual basis well until 2020. So there really is plenty of time for the Fed to be patient and wait for the economy to at least be back to trend growth before initiating liftoff.
Well, you can watch the entire coverage of what the Fed is likely to do starting 11:30 p.m. right here on CNBC TV 18. A quick check of how Wall Street is faring ahead of that crucial meeting. Stocks opened with caution, but now trading with healthy gains. Let's bring up the Dow, the Nasdaq for you at this point in time, anticipating, well, 113 points higher there on the Dow, and the Nasdaq is about 12 or 13 points higher at this point in time. The big story back home, the 1993 Bombay blast convict Yaqub Memon is set to hang. The Supreme Court has upheld the death warrant issued to Yaqub Memon, saying there was no procedural lapse in issuing the death warrant. This comes after the Maharashtra governor rejected his mercy petition, leaving only one legal avenue, that is his fresh mercy petition, which is pending with the President. The Supreme Court has also ruled that there was no procedural lapse in hearing Memon's curative petition. Authorities in Maharashtra are going ahead with the execution as planned. Memon is set to be executed at the Nagpur Central Jail tomorrow. Authorities did a medical checkup and sources say Memon is physically and mentally fit. Remember, in his mercy petition, Yaqub's lawyer said he has schizophrenia.
Former President APJ Abdul Kalam's body has now been taken to his native town of Rameshwaram, where it will be kept at his ancestral home for the locals to pay their tributes before the cremation ceremony that is scheduled for Thursday. The Prime Minister and other senior cabinet ministers may also attend the cremation, which will be held with full state honours.
Well, on that note, it is time for us to wrap up this edition of India Business Hour. As we've been pointing out, stay tuned to CNBC TV 18, all the live action from the FOMC meeting right here, starting 11:30.